the British High Commissioner. It's a great pleasure to have you all here. It's a great pleasure to see so many people here. And I know that you've not come to listen to me. You've come to listen to our speakers who are going to be giving you the annual British Chamber economic briefing. The session this evening is going to be moderated by Simon Baptist, who's the Economist's global chief economist, and he will introduce the other speakers, and I'm sure that you will have an extremely informative evening, and there'll be a great opportunity as well to have discussion after the speakers have presented. Thanks very much.
Thank you, Scott. Thanks for coming along tonight, everybody. The ASEAN region is obviously quite an interesting place to be at the moment, both in terms of economics and in terms of politics. So I think we have a lot of material for a good discussion tonight. We have some great speakers, and I hope that we'll have some good questions from the audience as well. I'd first like to just start by thanking the Fry Group for sponsoring tonight's event, and also the British Chamber of Commerce for organising and giving us the opportunity to come together in such a great venue and have this discussion. So here we are in Southeast Asia, and I said I think it's an interesting time to be here. And in many of ASEAN's critical economies, it's an extremely transformative time. What you most of note at the moment is we've just had Myanmar's first ever democratic elections, since 1990, and probably the first ones that are going to be honoured. And the current Burmese opposition looks like it's won a vast majority of the popular vote and will get close to a majority of seats in the parliament. So an exciting time for Myanmar, which is a large market and obviously a very early stage of development. At the same time, we've got another of the world's biggest countries, Indonesia, right on our doorstep, where we all had very high hopes, perhaps two years ago when Jokowi came in with promises of reform and banishing corruption and making life easier for foreign companies. His first 18 months have been quite disappointing. Seems to have turned a corner in the last few months with some of his new appointments, a recognition that maybe the old policies weren't working. If Indonesia did open up, of course, that would be incredibly exciting. At the same time, we have some countries that are struggling, like Thailand, where the political ramifications are feeding through into the real economy. And of course, instability there is going to be present for a while longer yet, until the sort of indeterminate date when the royal succession is finally sorted out. I could run through all 10 countries, although maybe 9, maybe Brunei is not so exciting. I won't give you too many of my views right now, but I'll introduce our two speakers who are going to lead us through today's discussion of economics, politics and business, what it means for us in the region, and especially for us as people who are interested in Britain and British business. So first we have Glenn Maguire, who is the Asia Pacific Chief Economist at ANZ Bank, one of Australia's big banks, and the ex-employer of my father before he retired. So we'll catch up about that later. And we also have Peter Mumford, who is the Southeast Asia Director for Trade at the British High Commission. So what we're going to do is we're going to have 10 minutes or so from each of our speakers. I'll abuse my position by asking them a question or two after they finish, and then we'll throw it open to the audience. And if you don't have enough questions to ask, then you'll have to listen to me, ask more questions until the time's up. So there's your incentive to think about questions as we go along. Glenn, do you want to start us off?
Okay. Okay, thank you very much for the invitation to address you tonight on the outlook for the global economy and the Asian economies. As Simon mentioned at the start, it really is a transformative time here in Asia, not just because of a lot of the multilateral developments we're seeing, such as the Trans-Pacific Partnership, also the commencement of the ASEAN Economic Community, but more simply because the fundamental drivers of economic growth to which this region is exposed are changing. And when you think about it, the US economy and the Chinese economy are about the same size when you adjust for prices. And within the US economy, household spending is 70% of GDP. In the Chinese economy, investment spending is 50% of GDP. And in China, we have a slowdown that is led by investment spending. In US, we have a recovery that should be driven a lot more by the US household sector. So just on that pure balance, the rotation of growth away from the Chinese industrial complex and towards the US household complex should be a net positive. But it hasn't turned out to be that way. In fact, the transition has been a little bit awkward. One of the reasons we were so positive that it was going to occur is because of the very big decline in oil and commodity prices. This is freeing up disposable income for households. They should be spending that, but what we've found looking at our analysis is typically households wait for gasoline prices to adjust for 1 to 2 years before they recognise that adjustment as permanent and changing spending. But I still think over the medium term that is going to be a positive. And the China slowdown is clearly, I think, it remains the high probability event at this stage. The government is clearly trying to rebalance the economy away from the old China towards the new China, and then every now and then markets flirt with these risk events like non-financial leverage, lift-off tantrums, Brexit, something you can't really be specific on, but it tends to add to the risk-off appetite in markets. So first of all, let's start with an image that those with an eye for detail will recognise as a map of the world. And what we've done in this map is we've simply looked at which economies are going to be growing, which are going to be slowing, and which will be unchanged. And I had one of my local economists put this chart together. So being from Southeast Asia, he thought unchanged was minus 0.5 to plus 0.5. In Europe, that would be the difference between a recession and a boom. But what we're having is across the global economy, the backdrop is very, very mixed at this stage. And it's unusual to have such an uneven backdrop to economic growth. And I think it is reflecting the fact that this transition away from the Chinese industrial complex towards the US household complex is not occurring smoothly at all. Now, the first point I wanted to address is China. The Chinese economy is clearly slowing and slowing very quickly. And there's always a common perception that China fudges its numbers. It grows 6.9, 6.8. It has difficulty adjusting for prices. So what we like to look at is the nominal secondary sector. And this is 50% of GDP. And this is your old China. This is commodities, this is manufacturing, production, construction, infrastructure, etc. It's 50% of GDP. And the orange line is the tertiary sector. That's what China is trying to rotate to. That's services, spending on education, etc. And the first point to note is the economy generally grew in sync until here, when they started to rebalance the economy. And you can see that tertiary activity, or secondary activity, has collapsed. That's growing at just 1.7% year on year. That's how China is transmitting its slowdown to the rest of the world by lower demand for commodities. But services, particularly financial services, is holding up and holding up very quickly. And this is another area where people thought China was fudging the numbers, because financial services grew very strongly in the first half of the year during the A-share market boom. But then when the A-share market collapsed, financial services growth held up. But I'll let you in on a little secret. Financial services firms raise or make money when the market's going up and down. It's investors who either make or lose money. So I think what we're actually seeing is the economy is rebalancing and rebalancing quite quickly. Another way of looking at this is geographically. Because China is centrally planned, the economy has typically been arranged in clusters. So the orange is all your heavy industry, commodity intensive, etc. That's growing around 2.5%. The light blue is interesting. Before the Beijing Olympics in 2008, China moved all the polluting industries aligned with residential construction into the hinterland to clear the air. That light blue is currently growing around 6%, which suggests the property sector may be stabilising. But the dark blue, this is your high-income economies, high-income provinces. Some of those are growing 8 to 10% at this stage. Tibetans in Xinjiang, obviously convergence rather than outperformance. But I think, one, the Chinese economy has perhaps slowed more than people expect. Two, it is actually rebalancing more towards a services-led economy. So for Asia and Southeast Asia, which is such a large trader with China, the first point I want to make is that the components of the economy which are very important to Southeast Asia have slowed and slowed dramatically. There's only two economies that have a larger exposure to the Chinese consumer sector than to the Chinese industrial sector, and they're Switzerland and New Zealand. So one, China has slowed. Two, it does appear to be growing more in the services sector. So I think services growth is a little bit stronger. The other point we'd make is that this slowdown is basically what's knocking on the what we refer to as a trade recession across Asia. So when we look at Asia's exports and imports, we can see that they're currently growing or falling by double-digit contraction. It's very unusual to have such weak export and import growth in Asia at this stage. And China has certainly had that impact as well. And it's not just China's fault. The nature of the US recovery has also been one which has been more focused on the services sector. So in this chart, we've just taken the ratio of global trade to income and compared it against jobs created in the services sector and jobs created in the goods sector. And the US economy has been a services-led recovery at this stage. And that's been problematic because people in the US do not import services like haircuts. Maybe Donald Trump does, but the majority of people don't. So you're not seeing the positive spillover to the economy as a result of that via trade. So global trade is unusually flat in the economy at this stage. And when we look at it that against export orders, this period of extreme weakness in global trade looks set to continue. And what makes it even more unusual is that the typical cushion to a weakening in exports has been falling currencies. And you've seen falling currencies across Asia, making exports more competitive. But we're not seeing the kick because that pattern of external demand is so uneven at this stage. Unfortunately, this was the chart that I wanted to refer to, and it's blank. So you're just going to have to believe me. But the Asian economies are open trading economies. There's two other economies who back me up. Have a very high exposure to trade. So for Hong Kong, it's 400%. Singapore 300, for ASEAN about 75 to 100. So if trade is underperforming, the ASEAN economies are going to be underperforming. And that's clearly what we're seeing at this stage. And we think probably this slowdown is going to continue into the mid part of 2016. And given the various exposures each Asian economy has, one to the trade cycle, two to the US, two to China, the mix of growth across Asia is going to become much more different and diverse than what we've seen before. But there's basically three economies that we think are going to be the standouts of Asia over 16 and 17. We call them the VIP economies. Vietnam, India and Philippines. India and Philippines, probably the obvious examples. they're more correlated to the global services cycle via BMOs and call centres. Vietnam is bucking the regional trend of a trade slowdown. You're seeing factory production shift from China into Vietnam, so that's been very, very strong. And I think they're probably your three economies which are going to be the most stable. Singapore, very close to a technical recession, not just a trade recession. Thailand, under the junta policy, is having difficulty gathering traction. Malaysia is so unfortunate. All the economic policy has been first class, the introduction of a goods and services tax, securing the revenue base, the current 5-year plan, the goals to be high income status. If just you didn't have those horrible optics over 1,4MD and that surrounding it, I think Malaysia would be a much more attractive economy. Indonesia, 12 months ago, we were drinking the Jokowi Kool-Aid. We were like talking about that economy maybe getting a ratings upgrade next year. Now we're sort of tactfully backing away from that. I think the unfortunate reality is Indonesia has become more inward looking just at a time when the ASEAN economic community is going to start. And with a population equivalent to half of the ASEAN, GDP equivalent to 33% of the ASEAN, it does seem to be the natural leader of that. So I think this unevenness and this uncertainty in the global economy will continue, but ultimately 16 and 17 should be the year that we do start to see a yield to these more medium-term structural trends. The return of US household spending and the fall in gasoline and oil prices finally starting to gain traction. Thank you.
Thanks, Glenn. So you just mentioned Indonesia. I did tell him what I was going to ask him, but I've had 3 wines, so I'm going to change it without telling him. You talked about Indonesia and being a regional leader, but I mean, I guess I might say I don't think Indonesia has any interest whatsoever in that. I mean, it's got the least to gain by ASEAN integration. It's got the biggest domestic market, and they've and Jokowi, but not just him actually. I mean, all recent Indonesian administrations have shown little interest in playing a bigger role globally. So, what are the prospects for an Indonesia sort of holding its weight on the global stage?
I think over time, and you know, during his election campaign, Jokowi was very much more outward-looking. His first visits were to engage with the ASEAN and to international leaders, and he certainly gave me the impression that Indonesia was going to, like Abe when he became first Prime Minister of Japan for the first time, you know, there was going to be that lifting Indonesia's influence commensurate with its economic weight. The domestic politics has played out poorly for that. But it's interesting if you look at other sort of trade agreements. So, you know, in the EU, Germany is around 25% of GDP and 25% of financial markets. NAFTA is dominated by the US, around 80%. And then in the ASEAN, Indonesia is 34%. And I think over time, you know, Indonesia may be like the Berlin model. They don't want to be the out-and-out leader, but just that nature of them being the largest economy does see them actually become the reluctant economic and political leader of an ASEAN. But, you know, as events in the, I have to be very careful. Every time I say South China Sea, I get in trouble in Vietnam. Every time I say East Sea, I get in trouble in China. So events in the waters cause issues, and it highlights that ASEAN does not have multilateral institutions and architectures which it really needs. And I think, you know, Indonesia should be taking a more active role in sponsoring those developments.
Perhaps ASEAN made a big mistake putting its headquarters in Jakarta. I leave that as a comment. You had a very interesting traffic light chart of like where growth is accelerating and where growth is slowing down.
Yes.
And the 2 biggest patches of green on your chart were Russia and Brazil,
Yes.
which are both in recession. And next year will still be in recession, but just not quite as bad.
Yeah.
So doesn't that if our bright spots are both in recession, doesn't that sort of suggest that we should be a lot more pessimistic than we are about the global economy?
Yeah, look, I mean, it's one is a very keen observation. Without the names of the countries, I was like, look how strong the US is growing, and it was Canada. I mean, Russia was contracting 3.6% in 15. We're expecting it to contract 0.3% this year. Brazil, you know, and moving from a deep contraction to not as negative a contraction. But the point that is interesting, I think, is 10 years ago, emerging markets as a percent of global GDP were something like, you know, 13%. Thanks to China, that growth in South-by-South trade, that's now been lifted to 35%. Whereas the US exported a shock to the global economy via financial markets, China can potentially export a shock via trade slowdowns, which I think, you know, we are seeing at this stage, and why that picture is uneven. But to me, you know, things are moving in the right direction. I think, you know, we're clearly towards the bottom of the monetary policy cycle. I still believe that when the Fed does raise rates, and ANZ is still bravely sticking to December, that will be a vote of confidence, I think, in the US. I think that will have an announcement effect. And you know, I mean, the boom years of the 90s and 2000s, I think in 10 or 15 years we'll look back at them as a dislocation. They won't be repeated. But I think we are moving to a gradual, gentle ascent in the global economic cycle.
Well, please keep thinking about what Glenn said to you, and get ready for your questions afterwards. But next we have Peter to talk about what Britain's doing in the region and the business environment.
Great, thanks very much. I think I may as well actually I'll try talking about. Glenn and I were worried about whether we would actually get on and off the stools, but he's managed to navigate it, so I'll give it a try. BritCham colleagues have seen me present on ASEAN's economy before, which is why they've asked me to talk about something else today, which is quite shameless propaganda, basically, about what the UK government is doing in terms of economic diplomacy in the region. And what I mean by that is not what UK trade and investment, the sterling work they're doing in terms of commercial links, but to give you a bit of insight into some of the sort of trade policy business environment we work. To set the context, this is a graph I produced a few years ago, which shows the sort of the bars show total UK exports, that's goods and services, to the different markets. And the red diamond shapes are the GDP size, if you like, the size of the market. And what it's telling you, if you look at the second one, the ASEAN 6, the sixth largest economy is ASEAN's, is that we punch above our weight in ASEAN in terms of how much we export to the region relative to the market size. If you look at similar sized red dots, which would be Brazil or India, which are similar sized economies to the ASEAN 6 put together, we export a lot less. Our exports to the ASEAN 6 are 3 times what they are to Brazil, which is the same size GDP when you put it all together. That's the good news. The bad news is that when I produced this graph 2-3 years ago, it looked much better. ASEAN was much closer to where China is now. In 2002, our exports to ASEAN, as a percentage of exports to mainland China only, so not including Hong Kong like I had done there, were 95%. So we're exporting 95% as much to ASEAN as we do to China, mainland China only. Last year the figure was 63%. So it's really pulled ahead. Our lead over India has narrowed, and the same over South Korea. Now, last year, I think in total, a 14% drop in our exports to ASEAN, UK goods and services exports. Part of that was the slowing economies, which Glenn has been talked about. Part of it's the strength of the pound, but we also think there's other factors at play. Because some other markets, particularly China, India, saw 10% increases in our exports last year, as indeed did South Korea, where Scott was ambassador at the time. But that's the only sycophantic point I'll make today. So that's the kind of context for what we're trying to do in terms of boost trade and investment links with the region. I drew this when I was trying to understand who is in the Trans-Pacific Partnership, who was in the Regional Comprehensive Economic Partnership, who obviously who was in ASEAN, I had a vague idea about that, who was in the ASEAN 3, and then who was in APEC. And if you've drunk too many glasses of wine, this will probably give you a bit of a headache. But basically what it's telling you is that there were 4 countries there in purple: Malaysia, Singapore, Vietnam and Brunei, who are in all of these different trading groups, which means if you're looking to invest in a country in order to take advantage of free trade agreements, they're the best markets to go into. It also means this sort of evolving regional architecture is somewhat centered around ASEAN. ASEAN likes to talk about it being ASEAN-centric, in particular the Regional Comprehensive Economic Partnership, which involves all of ASEAN and its FTA partners. But progress on that has been much slower than it has on the Trans-Pacific Partnership. So what does that mean for us, and why am I showing that slide? Because it means we need to think about what we do in terms of free trade access to ASEAN and ensuring we have preferential access in ASEAN and not losing out to competitors. So where does the EU free trade agreement sort of agenda in ASEAN start? Well, in Singapore we had the start of the FTA, as in the bit minus investment, which came later, was actually originally concluded in 2002. 3 years later it's still not being implemented. The investment chapter has subsequently been negotiated. It's gone through legal scrubbing, but it's now being reviewed by the European Court of Justice, which is looking to see whether the competencies touch on what we call national competencies in Europe and therefore need to be approved by European parliaments as well. While that review is taking place, the FTA with Vietnam, which is also being negotiated and was concluded, is basically sort of on hold to be implemented until that judgment's come through. The Europe launched negotiations with both Malaysia and Thailand in recent years. Malaysia there haven't been formal meetings for a couple of years now in terms of negotiations. The reason for that is that Malaysia want to focus on the TPP. So now that is out of the way, we hope there'll be a bit of progress on the EU FTA. Thailand is more formally on hold because of the political situation there, so post-military coup, the FTA. But on a more positive note, in the last few months there's been scoping exercises and scoping talks with Indonesia and Philippines to explore a free trade agreement. And certainly with Indonesia, we've just heard a little bit there about the kind of negative outlook for trade and investment in Indonesia. One of the slight bright spots is that Indonesia has been much more positive in recent months about the idea of trying to negotiate a free trade agreement with Europe. Now, whether they'll come to the table with the kind of commitments required is another issue. And actually, the Philippines has been a bit of a surprise. That's looking quite positive, and the negotiations could start potentially as early as the beginning of next year. And then there's a big question about a block-to-block deal with ASEAN, which is something that the Prime Minister stressed when he visited here, and he's keen to see, and that could deliver big benefits. But until the EU has done several bilateral deals with individual countries, and until the political obstacle of Thailand is removed, these talks cannot begin. So that's the. There's something wrong with my slides are suffering the same as Glenn's. So I'll have to make it up as well. I'm sure it's happening. So what you would have seen is actually some nice pictures. So one of them was of our IP attaché in Scott, highlighting our IP work in the region. And for those of you that have an interest in intellectual property and haven't yet met our regional IP attaché, Chris Belko, please let me know and I'll introduce you. Another area we're focusing on are these kind of behind the borders issues, where we're trying to really, in addition to improve the access to markets, trying to improve the environment for your businesses, is anti-corruption and transparency. We funded at the ASEAN level the creation of a regional working group on anti-corruption and business integrity. We took part and we've actually facilitated Thailand joining the Construction Sector Transparency Initiative with our support. We're working on public procurement in a number of markets and a number of those initiatives going forward. We're also working on regulatory reform with our Department of Business and trying to sort of share lessons on UK regulatory experience and how they can lighten the load on businesses. And we are also working quite strongly with the OECD, who, as you may know, have a big Southeast Asia program. They've launched an enormous program in Southeast Asia trying to improve the business environment. And we're one of the few countries, along with Australia, New Zealand, Japan, that are very actively supporting this. It's a real shame that this one isn't shown, because I have a geeky obsession with something called the Singapore Kunming Rail Link. And the one on the left is supposed to be a map of the Singapore Kunming Rail Link. And so if you can just imagine that there's a map of mainland ASEAN behind those red lines and circles, behind each of those circles is what they call the missing links, the bits of railway that need to be built so you can actually have a train running all the way from Singapore to Kunming, both west through Myanmar and east through Cambodia and Vietnam. And the red circles are the missing links in 1995. And then when you put them up and show the missing links in 2015, they're exactly the same. So in 20 years, not a single one of those missing links has been built, and the shortest one is 6 kilometres, which is between the Thai and Cambodian border. And ASEAN officials kept telling me that that would be completed this year, but it's now been delayed another year. So they're struggling on those 6 kilometres. But what's interesting is the red line going down, which if you again imagine your map of mainland ASEAN sort of superimposed, that's kind of basically traversing Laos and Thailand, is that China has sort of got bored waiting for ASEAN to do its rail link, and is actually just going straight down through Laos and Thailand, and has reached agreements with Thailand to build railways for them, and is trying to do the same in Laos. And that way it gets the same gauge. Also in Cambodia and Vietnam, well, there's those big missing links there on the kind of the right of the picture. In the meantime, Japan is building road links between those countries, which are rendering ASEAN's plans redundant. Why do I say that? One, because I'm a bit of a geek when it comes to railways. The other is I just think it highlights some of the challenges ASEAN faces in some of these cross-border projects and pushing that forward. The other is the role of China and Japan in the region's infrastructure development. And it's a big area for us is trying to think, along with UKTI colleagues, how we sort of work more closely with Japan and China in the region. We've also done a lot of workshops on PPP, public-private partnerships, trying to improve the frameworks, create opportunities for British businesses. We had just last week workshops in Vietnam, Indonesia, and a regional one in Thailand. Nice pictures. Another area we focus on a lot is financial services. In terms of boosting sort of bond markets, Islamic finance. What you would have seen on the picture on the right would have been a picture of the Malaysian Prime Minister at SAND at the World Islamic Economic Forum in KL, which is the UK kind of country showcase, which she visited last week. So we're doing a lot on Islamic finance with Malaysia, also Indonesia. We're doing a lot of capital markets, integration and development as well. And in Singapore, we are here. Of course, we've had a financial dialogue which is pushing forward regulatory and commercial cooperation. ASEAN Economic Community, the Prime Minister would have been a picture of the Prime Minister and the Secretary General of ASEAN, and that was the Prime Minister's first visit, the first visit of any British Prime Minister to the ASEAN Secretariat, and we are trying to think about what we can do to support regional integration, and I shall leave it there.
It wouldn't be a British event without a train gig, and we should talk later because I spent 6 years living next to Oxford Railway Station, and I can tell all the trains apart by sound. I'm going to come back to the audience in a minute for questions, so please start thinking about what you'd like to ask any of the panel. But you talked a little bit, Peter, about some of the difficulties with negotiating FTAs in the region and with some of the approvals that are needed from the European Commission. Do you think that's about to get a whole lot easier?
Well, I think, no, in terms of the approval in terms of the Commission is obviously a complicated process with 28 countries. And the point I would stress is that amongst those 28 countries, the UK is obviously one of the most proactive in terms of pushing the trade agenda, and has really worked quite hard to put ASEAN on the trade agenda, including the newer markets like the Philippines and Indonesia, where there is certainly a certain amount of credit is due to us in terms of getting those on the agenda. But it's inevitably complicated with 28 countries, but progress has been made. The European Court of Justice renewal, sort of a review of the Singapore one, will hopefully be a one-off, in the sense that once that's then done, there will be a precedent set for the other FTAs, so this won't happen to all of them. And also the Commission and EU member states have to balance, on the one hand, wanting to see fast progress with free trade agreements, on the other hand, the UK and other countries are obviously keen that we keep stock and review the competences of the Commission versus national government and ensure that they're not changing.
So I'm not sure whether my segue failed or you deliberately avoided the topic, but I was trying to get at that UK might not be in the EU for very much longer.
Really?
And what might that mean for economic diplomacy in the region?
Didn't think you'd ask. My last slide was on the ASEAN Economic Community, obviously, which you saw the pictures. And I often get asked when I talk to people in ASEAN, we say we want to help you in terms of creating a single market and regional integration. And they suddenly, some look puzzled and say, well, in the UK, you're thinking about leaving Europe, so why on earth would you want to come here and support us in terms of regional integration? I mean, the point I always make is that, on the one hand, obviously, even before the previous issues about the renegotiation, is that the UK has always been probably one of the strongest proponents of the single market in Europe. And there's a difference between being in favour of monetary integration and having a currency and having a single market. And so it's perfectly plausible that we're not a fan of being a member of the euro, that's the current government position. But on the other hand, we have this very strong proponent in terms of market integration, and market and monetary integration are not the same thing. So that's the first point I would make. And the other is obviously the kind of standard approach that the Prime Minister has set out in terms of the renegotiation and putting that to the vote. I mean, I was quite struck that in the conditions the Prime Minister set out 2 days ago in terms of what he wants to see in terms of the renegotiation, actually one of the points he stressed was the full completion of the single market, a more competitive Europe, more progress on areas like digital, the services sector where there's been less progress. The other was he talked about wanting to see more progress on EU external trade policy. And he actually mentioned among them potential deal with China, the obviously TTIP with the US, but he also mentioned the deal with ASEAN amongst that as well during his speech. So I don't think it's contradictory.
Okay, so now it's time to throw the floor open to questions. So we've heard a lot about different countries in ASEAN, economics, politics, business, what the UK is up to. Got our first question here. There's a microphone coming down. Just quickly say who you are and then fire away.
Hi, I'm Vikas. My question is for Glenn. In fact, I have two questions. What's your viewpoint on the currencies? They had a big impact in 2015.
Yep.
And secondly, you mentioned that from next year we should expect that the global growth rate should improve. So what's the impact of that going to be on the commodity prices?
Firstly, with the currencies, it's an interesting point. I think it highlights the fact that the past 2 to 3 years have been exceptional years for the US dollar. And that's a dynamic we think will probably continue for another 3 or 4 years. I think the total appreciation of the real effective exchange rate will probably be something like 25 to 30%. Now, normally when currencies weaken, it makes your goods more competitive in global markets, you sell more, your exports pick up. I think policymakers around the region, fortunately, have recognised that in a weak final demand environment, there's no advantage to weakening your currency, which is why I'm quite confident we're not going to see a currency war across Asia. But when you look at the currencies that have moved, they have been, by revaluation, they have been your more rigid ones. So the Chinese yuan, which was sort of semi-pegged to the US dollar, the Vietnamese dong, which was also semi-pegged, they moved they hadn't moved against the US dollar, whereas countries like the Thai baht, the Malaysian ringgit, the Indonesian rupiah have fallen between 15 to 20%. So I think you may see some more discrete revaluations of your more rigid currencies over the next 1 to 2 years, but I think any further downside in Asian currencies is going to be the flip side of universal, unilateral US dollar strength. What we're focusing on is there's not the spillover to goods in the export sector, but there still does appear to be the spillover to inflation. When you look at inflation in each Asian economy, you can see there's a very clear split. Those goods which are exposed to international markets are becoming more expensive, and that may present policymakers a little bit of a bind over 2016, 2017.
Okay, what I might try and do now is take sort of 2 or 3 questions in a go and then have the panel respond to them as a bunch. So, hand straight up if you'd like to ask a question. We've got one at the front, and if you get your hand up by the time you finish speaking, I'll take another one.
Steve Wine, Synthesis Consulting. Back to your heat map earlier on, Glenn. You showed, if I looked at it right, on ASEAN, the only one that was green was Thailand.
Yes.
And it didn't really fit with your comments earlier on, which I did agree with, in terms of the post-coup troubles that Thailand has had, and obviously the uncertainty that leads all the way through to whatever point succession, and in my view, for many years after the succession comes. So I'd like to have your comments on Thailand's prospects.
Yeah, I mean, you'll note that we put Vietnam as one of the economies that we see sort of bucking this regional trade recession. And I think, Vietnam has had very good policy. They've had an open door FDI policy. They're attracting FDI from Korea, Japan, Taiwan, the US, South Korea. They've been very, very successful in starting that process of cascading up value chains. But I wonder how successful they would have been with that if Thailand hadn't ground to a halt. One, as a result of the floods. Two, as a result of the political difficulties. Three, as a result of FDI backlogs. Ironically, for an economy that's growing so weakly, the Thailand economy is actually operating at full capacity. And what we're seeing is that a lot of multinationals have chosen to move their production platforms to Vietnam instead. Now, I'm quietly optimistic we're at a turning point or an inflection point, because what you're seeing Thailand doing now, and Thailand was the first ASEAN economy Japan started to shift production platforms to after the political difficulties with China in 2005. What you're seeing in a low trade, low margin environment is multinationals are trying to find efficiencies. They're trying to extend value chains even further. So Thailand is building production clusters right on the border with Myanmar, right on the border with Laos, and getting access to even cheaper labour and improving margins that way. It's also adding to capacity. It's allowing Thailand to move up the production chain. So that's one dynamic which we have been more supportive of growth. Two, we're up to, I think it's 2.5 years since the fiscal stimulus measures were announced. I think the military's concern about those being completely clean from an administrative purpose has delayed them. And I think you will start to see some long overdue fiscal spending come online in Thailand. So it's going to be a while till we get back to 4 or 5% growth, but I think we could see growth with a 3 in front of it in 2016.
But surely Thailand is just a ticking time bomb until the royal succession happens and there's going to be another political crisis. We'll ask Peter his views about the prospects for a civil war and a few years of recession again.
Look, I mean, I think that is, this is the de facto marker I use of the King's health. When the junta says when we're going to have democratic elections, if it's soon, I think, okay, the King's health is obviously not that good. If it's a long way away, the King's health as well. I think one of the reasons this military junta has been in place for so long is to manage that transition. The normal timeline from a military coup to a democratic election in Thailand is between 18 and 24 months. So I think that's one of the reasons this military coup looks to be a little bit more enduring. But you're absolutely right. The economy is going to go into lockdown, months of mourning, capacity production ground to a halt, and it will be a significant disruption to growth. But whether it's a permanent shock to the national psyche, I'm not convinced.
So Peter, on camera, I won't ask you to respond to that directly, but perhaps to the more indirect point about business environment in Thailand, is it getting a tougher place to do business, or
I think certainly there's a sense, with the Foreign Business Act, which was touted several months ago, and actually thanks to the work of our colleagues at the embassy in Bangkok, along with the Japanese and other countries, we were able to resist some of those changes coming in, but there was certainly a series of measures that looked rather protectionist. And I think some people also sometimes underestimate how restrictive the Thai economy is. When you look at figures in terms of openness to FDI, it's quite limited. In my mind, sometimes it sounds even more like a geek. I was wondering if there's a sort of inverse relationship between how open and friendly people and countries are and how open and friendly their economies are. And Thailand might be one that's extremely open and friendly people, but actually quite a closed economy, whereas Indonesia's got extremely open and friendly people and it's a more kind of closed economy, and I won't say where the UK is on that. But I think for me with Thailand, the issue, you mentioned the issue of succession, of course everyone is worried about the risk factors around that. I mean, for me, I think it's more of a medium, longer term question, which is just where is Thailand's place in the region? I mean, it's blessed geographically as being, to go back to my map that didn't show, of railways and roads, that all roads and rails lead to Bangkok in mainland ASEAN. So, yeah, it is trying to tap into that and becoming a sort of financial hub for the Greater Mekong. But the question is, its labour is more expensive than some neighbouring countries, but its education skill levels are not up at Malaysia. So, if you think of countries in the region that could be potentially waltzing into the middle income trap, I think people sometimes think of Thailand as one of the ones that's a risk. And the other is, this links to the question about protectionism, and what Glenn was saying earlier is that I would agree with Glenn that some FDI was diverted from Thailand to Vietnam because of the floods, because of the coup, but a lot of it is cheaper labour, but also the approach that the Vietnamese government has taken of proactively being open to foreign investment and, importantly, taking part in the Trans-Pacific Partnership, concluding a deal with the EU, and that adds to attractiveness. And if Thailand changes its position, then that will be one of the big questions going forward. Does Thailand join the TPP? Because it's often pointed to as one of the countries that will lose the most by not being in.
Actually, the point about Thailand, the middle income trap, is a really good one, because Thailand's demographics look very OECD. It's got a very low birth rate. Household size in Bangkok is sort of what you see in the European city, and so Thailand, like China, is facing the prospect of getting old before it gets rich. We have some more canapes and wine to have downstairs, but if there's more formal questions, we have the informal questions. We do have time to take one or two more. With a very typically shy British audience. Yep, one more.
What about Singapore and its role in ASEAN? Because it's a wealthy place that's small.
Singapore's role in ASEAN, small but wealthy. Where does it finish up? Maybe a quick word from both, and then we can head downstairs.
Singapore is often held up as the country that will gain the most from the ASEAN economic community and ASEAN integration. And I think that's kind of on the one hand a blessing, on the other it makes it quite difficult, I think, for Singapore to be seen to be trying to lead the process because of that very fact, and other countries may be resentful of it, and I think Singapore's quite conscious of that. So it stands to benefit. The other point I would make is that while I think Singapore is very much in favour of on the trade liberalisation agenda, I think it's got, I suspect, more concerns on the labour parts of the ASEAN economic community in terms of freer movement of skilled labour, but that's a part of the AEC which is moving extremely slowly. But that's an area that's a bit more concerned.
I think the obvious one is Singapore will be the financial capital of the ASEAN. It already represents 33% of deficit. And the current Singaporean example, trying to move up the value chain into even a higher value-added production, to be the services capital, etc. Singapore has to constantly reinvent itself to maintain that advantage. And to me, I think, the one advantage Singapore is going to have, and it may need to modify it a little bit, is its education system and its heavy investment in education, which is skewed a little bit too much towards the sciences, to math, to statistics. To be a true leader and innovator, you need to have education systems that are ecosystems for creativity. And I think it needs to move a little bit more in that direction and focus on being an education capital and have the type of education systems that, one, tolerate failure, but two, lead to genuine innovation.
Well, at the Economist Intelligence Unit, we've always been very pro-Malaysia. In spite of everything, it does have good economic policy making, which you did mention. So I'm going to put my vote for KL as the second business hub in ASEAN over Jakarta or Bangkok. Okay, so thanks a lot for your questions. We'll continue now downstairs. Please come and grab any of us if there's things that you want to ask.